Hey traders, this is Blake Morrow with Trader Summit, and with me today I have Miss Katie Stockton with Fairlead Strategies. Is that correct?
That's right. You got it.
Yeah. All right. Well, it's good. It's good to meet you and face to face, kind of. But it's because I've heard your voice. I've seen you on CNBC. I've seen you on all the financial outlets, and I love your work. So I'm really excited to share this with the Trader Summit community and for them to see what you do. So tell us a little bit about yourself and how you approach the markets.
Well, thanks. Thanks for saying so, Blake. I've been a technician since college. I was very interested at an early age and actually had coursework that I pursued in college and took it from there. So I've been doing this for something close to 25 years. And over that time, I've developed a methodology, and it wasn't really intentional, but just working under some amazing mentors. I picked up some tools that I find real value in, and collectively they help me understand where the markets are going, what risk might look like, what's the potential reward, and gives us that directional bias that we're all looking for. So I found some great tools. I tend to be pretty, I call it indicator oriented. So I'm not just adhering to trend following gauges like moving averages for one, but also using momentum indicators, overbought, oversold indicators, and a lot of relative strength work as well. I've tended to focus primarily on US equities, but of course, with that, we have a lot of macro influences. So we go ahead and apply our tools and indicators to just about anything that influences equities, whether it's international markets, gold prices, crude oil, treasury yields, and anything that influences equities, we generally care about. And anything that has any liquidity and a price, we can have an opinion on. So that's sort of the beauty of technical analysis, in that we don't have to know a company to understand what the prevailing trends are, what momentum looks like, and what the potential might be. And really for market timing purposes too, to try to understand if you have a favorable entry point at hand, or if it's something that's looking tired. These tools are mathematically based, and they help us, I think, understand what the risk profile is for anything. And with that information, we can then go back to the fundamentals, the macro work, the political work, and see if it reconciles. And that's where we feel we have really the best success.
Well, that's pretty awesome. And what I've also noticed, in your suite of assets that you tend to focus on, I see that you've really started to focus a little bit more on the crypto markets, and how have they influenced what you do today in other markets?
We started focusing on it years ago, and it takes us about that long to really feel confident that our indicators apply. And I have to say, not only do they apply, but they apply really, really well in the same way that they tend to for currencies and FX more broadly, but also, commodities. Anything that has like a deep, liquid global market tends to really lend itself to technical analysis, broadly speaking. So we got a lot of confidence in our indicators and their value as it pertains to Bitcoin, especially, and other cryptocurrencies. And then we found that among our clients and subscribers that we had demand for that kind of product. So we started publishing weekly on cryptocurrencies back in March. And that's been a great product for us. It's something that we treat as a standalone aside from our US equity work, but it's been very well received. And we feel that breakouts and breakdowns can be so informational there, and also tools designed to identify inflection points just with the volatility that's inherent to that space.
That's awesome. Well, without further ado, I'd love to take a look at some of your charts and maybe some. Let's start with some of the broader indexes, like maybe like the S&P, and because obviously the S&P has been on the move as of late, and then we have things like crude oil that's been explosive over the last few weeks. So what are you seeing in the markets?
Today, it's a very relevant question. Of course, everybody's wondering, is this rally that we're seeing in the major indices something that has staying power, which is often the case on the back of a pullback? So you see here the daily chart, hopefully you see here,
yes,
the daily chart of the S&P 500 with some of the indicators that we like to use on a short-term basis. You can see a couple of moving averages. This is the 50-day, this is the 200-day. You see down here, we have the stochastic oscillator. That's an overbought, oversold measure. And these little numbers floating above the price bars here are called the DeMark indicators. So all of this taken together informs our analysis. And you can see that with today's gap up in the S&P 500, it's come into that 50-day moving average, which was broken back in here. That was mid-September. And there's another little overhang of resistance based on this so-called cloud model. So the shaded area there is a model that helps us understand breakouts, breakdowns, and prevailing trends. And because price has been below that cloud, that shaded area, we believe that the corrective phase still has a hold on the S&P 500. Above that upper boundary of the cloud, that's around 44.83 at this time, that would be a breakout that we'd be respectful of. However, we feel that it may fail below that level, not as much because of what the stochastic oscillator is telling us, but because of what our more intermediate term gauges have as a posture. We had some sell signals develop a few weeks ago based in part on the DeMark signals. If you can see that 13, it might look a bit small to you. That was a sell signal that had implications for about 9 weeks based on our measures. So we're arguably about 6 weeks into it. And so that would suggest that within maybe 3 weeks, we have a tradable low at hand. And what would enhance that in our work is an upturn and not the daily stochastics, which has very short-term implications, but also these weekly stochastics. So the stochastic oscillator on the weekly bar chart of the S&P will help us trigger a re-entry and really help affirm that an intermediate term tradable low is in place.
Interesting. A lot of people, and I'm glad you're pointing this out because so many people are looking at today's move. We're above highs from just a couple of weeks back, and they're thinking, well, this might be it. This might be the low. But from what I gather, you're a little hesitant at these levels.
I'm not chasing it today. It's also in part given some signs of intraday upside exhaustion. The beauty of the indicators that we use, they translate very well over different time horizons. So you can look at the same tools on, say, a 60-minute bar chart as you can on a monthly bar chart. So it's almost fractal in that nature, just the indicators and how it really doesn't matter the time horizon as much as which indicator to give more weight to in which environment. And that's sort of the art of technical analysis. I mean, are we in a corrective phase? Well, then we're going to give more weight to momentum versus overbought, oversold readings, that type of thing. So we have to understand the environment, and that's where the subjectivity comes into play. And of course, having more experience looking at the charts helps because it'll resonate and you'll say, well, I think I've seen this before. Okay, and this is how it played out. So that kind of visual memory, and with that in mind, and then also key levels that can be in play. That's been really helpful for our process. And for support and resistance, support being an area of buying pressure and resistance being an area of selling pressure, that can also really give us a sense of whether the upside is sustainable on a day like today. So you can see that there is resistance. It's not a breakout of any sort at this time. And for the fact that we have that weaker intermediate term momentum profile, which you can probably see best on the weekly MACD indicator, a very common trend following tool. You see this sell signal in here. It was that crossover at the start of September, still diverging and pointing lower. So we have that weaker intermediate term momentum context. And that to me is something that we want to be respectful of, even on a big day like today.
Maybe this is just one big dead cat bounce. So let me ask you this, Katie. When you're looking at crude, since crude has been such a massive mover over the course of last few weeks, and you could also obviously talk a lot about the macro implications of what crude is doing, but this breakout above, I want to say it was roughly around the $78, $79 level. How are you feeling about crude where it's currently at? Because a lot of people feel, hey, this is it. We're going to see 100. And a lot of people that I've been talking to are really targeting 100 over the course of the next, few weeks. It's obviously a big number. It's a big number. It's easy to say. So what are your thoughts here?
I also like big round numbers, and it is a major breakout in my work. We've been watching this $76 to $77 per barrel resistance level for a very long time. This is a monthly bar chart of generic crude oil or WTI crude oil futures. And you see that it's cleared this former resistance area pretty decisively. You could even draw this back to these previous lows from 2011, adding to that level's importance. So the breakout would be confirmed if we hold not just this month, but next month, but we already have a confirmed breakout on the weekly chart. So I think we'll see that upside follow through. You can see long-term momentum is very much to the upside, and you don't have an overbought sell signal at this time. Now, in our work, 100, maybe it has psychological importance as a round number, and by no means would we expect the commodity to go straight up from here. But you really have to go back to these previous highs for the next resistance level. So we're talking above 110, sort of 110 to about 114 as next major resistance. And that, of course, would be a pretty impressive upside objective. And it's not a near-term objective. It's just where we have next resistance on the chart. So something to keep in mind when you're trading the energy stocks, that the path of least resistance is higher for crude oil.
So that in itself is a really good point. You know, when people are targeting 100, realistically, that's not a number that you're going to be looking at. And you know, we've been doing this long enough where, you know, people have these, you know, random numbers that they throw out, and usually they're big figure numbers, and they think that that's going to be the end all be all. But there are a lot of bigger levels around the markets that you need to be cognizant of, right?
I think levels are always good to keep in mind. I never recommend folks use either sell stop or buy stop orders around levels, because it's, you know, if there's momentum coming into a resistance level, well, we could get a breakout. So you just want to see how something acts around these levels, and perhaps, you know, you'd expect a pullback or something like that. But I don't think there's really any time at which we derive an objective from, say, a breakout like we've seen in WTI crude oil, where we say it's going to 110 and there it's going to reverse. We just don't have that information yet from the charts or from the indicators. We can't anticipate those sell signals in our work per se, but we can certainly react to them when they do unfold. And that's important. It might mean that we don't sell at the absolute top. Maybe it's within a couple of price bars, months, days, weeks, whatever it may be. But that to us is still a huge value add, that these indicators can flash actual sell signals, binary, buy or sell, and give us that information. And then it's up to us to know what to do with it.
Right. Okay. Well, I want to ask you one last question. Turn your attention a little bit to the crypto market, because, you know, obviously Bitcoin's been on everybody's radar over the last several years, and the adoption of cryptocurrencies into Wall Street has really, in essence, validated it, at least at this point in time, as an asset class that is a tradable asset class that's here to stay. And, you know, a lot of people are drawing the parallels between right now and the moves that we've seen over the last, let's call it 6 months to a year, the same movement that we saw 4 years ago in 2017, 2018, where we might not make a new high and then we might start to come down again. Is that what you're seeing in Bitcoin right now? Or is there something completely different setting up on your screens?
I would say I'm not seeing an indication that it will stop at the high and reverse course. There's definitely resistance at the all-time high. This is a weekly bar chart that you're seeing of Bitcoin. And you can see this high from April was just about 64,900. And that's a natural place for a pullback to unfold. But we don't have an indication that that will be the stopping point for the rally. We're using a combination of monthly, weekly, and daily gauges. And for the most part, they point higher. For one, this is a great little pop-up in the stochastics that supports an eventual test of that high. You can see the shaded cloud model suggests that Bitcoin's still in an uptrend despite that major corrective phase that we had earlier this year. On a very long-term basis, we have on the monthly, of which we have not as much price history as we wish we would have, but nonetheless, we still have positive long-term momentum, positive stochastics, meaning they're pointing higher below overbought territory, and no big signals from those trusty DeMark indicators that we use. Short term, there are some signs of minor exhaustion that we've highlighted to our clients. So as of, I guess it was Friday or late last week, we had a minor sell signal supporting a couple weeks of consolidation within that bullish intermediate long-term context, but nothing that we would reposition around. So we really believe in the long-term potential for Bitcoin and other cryptocurrencies. And we've been trying to navigate the relative strength in the space, looking for sources of outperformance and underperformance among the altcoins. So we have ways to do that using these normalized relative strength ratios. And it can be really interesting. It can give you some great takeaways, great ways to take advantage of the space. And, we don't know enough about it from a fundamental perspective, but from a technical perspective, I definitely think there's a lot of potential here.
Well, Katie, I want to say that your views on the markets and the way that you look at the market is, in my opinion, spot on. And I love the way that you view and you put all of these indicators together to give your clients a great view of the entire market. So let me ask you this. If I'm a trader, I'm watching you and I'm seeing what you do, how do I find out more about what Katie Stockton does?
Well, thanks. And thanks for the opportunity. I would say the best way to find us is on our website, fairleadstrategies.com. And we do offer trials of our service. We make sure that we have a daily report. So we're giving a lot of flow on the markets from the very short term to the very long term. So I encourage folks to check it out that way. We are on Twitter. We're not the most active tweeters, but we definitely have some information there as well.
All right. Well, Katie, thank you so much for spending your time with us today. And the next time that you and I speak, I want to see some individual names, maybe some specific ones that might be breaking out that are really on your radar that day.
Great. Sounds like a good idea.
All right. Thanks, Katie, for joining us.
Take care.